Thank you for joining us here today. Let's tackle the outlook for oil first. We saw a huge run up in gold and precious metals this year, but we didn't extend that to certain sectors, including the energy one. So what's the outlook for 2026?
Yeah, so look, oil this year has been under pressure for two reasons. One is sluggish global demand. In China, 60% of auto sales are now electric, and that number is only going to increase. Meanwhile, OPEC has been unwinding its production cuts from the COVID era. And at the same time, we have so many new oil fields starting production in places like Brazil, Guyana, and Norway. You put all that together, we have an oversupplied market for the fifth consecutive year. 2026, we think it's going to be a sixth consecutive year of an oversupplied market. Now, does oil have a lot of downside from here? Probably not. Below $55 a barrel for WTI, that's kind of the threshold of pain, as we call it, for the oil industry. That's where the rig count begins to fall off a cliff, and company capital spending declines. So not a lot of downside left, but no real reason for prices to go up either. You mentioned a minute ago, peace talks with Russia and Ukraine. Mm-hmm. If those were to reach an actual peace deal, which seems like a pretty good bet for 2026, that if anything would pressure oil prices even further.
Yeah, and I would like to call the Wi-Fi Interactive up right now. We have a heat map of our energy companies. Most of these are large cap for the year to date. We got some big numbers up there, some small losses. Occidental down 16%, but the majors like Exxon, Chevron, both in either the single digits or low double digits. What's the outlook for energy companies heading into 2026, given what you just said, that we're headed for probably another year of lower oil prices?
So the stocks, just like the stock market is not the same as the economy, the energy sector of the stock market is not the same as the price of oil. It is possible for stocks to do relatively well, even when the commodity itself is under pressure, and here is why. Pre-COVID, the oil industry was all about drill, baby, drill. It was all about growing production and investing as much capital as companies could afford. Since the COVID era, we've seen much more of a capital disciplined approach within the oil industry. Companies are not trying to grow for the most part or very slowly. Instead, they are returning capital to shareholders in the form of juicy dividends and lots of share buybacks. And the big oils are the most active in doing so. So if oil prices are, let's call it flat to down in 2026, those dividends and those buybacks are still going to continue, which keeps the stocks, in favor for some investors, even though the underlying commodity has no real upside.
We got to talk AI here. I believe you've argued that big energy story is not about oil necessarily. It's AI colliding with the electric grid. And we do have U.S. electricity demand projected to grow 2 to 3% per year into 2030. So what's the 2026 setup here for AI, the electric grid, all that good stuff?
Okay, so first, let's just say this is a crowded trade. If we had this conversation 2 years ago, anything electricity related was perceived as a mature, kind of rather dull, slow growing industry. Now it's quite the opposite. This has been a derivative on the data center boom. And so utility stocks, by and large, are at record highs. Independent power producers, same thing. So the good news is, as you noted, power demand is growing. In fact, it's likely to grow as much in the next 5 years as the previous 25 years combined. At the same time, we have a lot of regulatory scrutiny of rising electric bills. If you look at the opinion polls, voters are frustrated with the fact that power prices are rising faster than inflation. This is going to lead to more regulatory and political pushback in some cases. You could see regulators begin to kind of crack down on some of the utility demands for rate hikes. It's obviously going to vary state by state, kind of region by region, but there is a risk factor to keep in mind. So the side effect of this booming in power demand is the fact that all of us are going to be paying more for our electricity with each passing year.